We're live from the Milken Institute Global Conference. Let's get right to our next guest. His name is Jon Gray. He's the president and COO of Blackstone, and we're in person together, which is always nice.
I like it. We're here in L.A., a lot of crowd, a lot of action.
Yeah, a lot going on here as well. I've been talking macro with a couple of my guests, Jon, and I want to get to it with you for obvious reasons. But you know what else I'd love to do is start off on data centers. Okay?
Okay.
Blowing your mind, right?
Yes.
And the reason is because until the last couple of months, it's what we talked about every damn day, for obvious reasons. And you have great perspective on it, given all the money you've put in and potentially more. So when it comes to data center usage, demand, and what you see right now from the hyperscalers and others, what are you seeing?
Well, you know, it's funny, David. I think that's a great question because everybody is now caught up on what's happening with the tariffs, which are obviously very important. But if we had been doing this 3 months ago, we would have been talking about AI and how it's changing the world. And I think there's a bit of a danger that it's almost like there's this wall in front of us and we've forgotten what's off in the distance, which is this powerful revolution in technology. Mark Zuckerberg said last week that what's happening in AI is staggering, and we share that view. And so I think as investors, you want to remember that it's really going to impact companies' productivity, margins. On the data centers, there's a real disconnect between the headlines, which are obviously negative, DeepSeek, Microsoft pulling back a little bit, some of the chip restrictions, and what's actually happening on the ground, which is strong demand. I mean, the big hyperscalers are spending 42% more this year than they did a year ago, $320 billion.
And we got a lot of the conference calls out of the way. Nobody really backed away from their CapEx commitments, even Microsoft.
Yeah, they're still spending an enormous amount. We're the biggest owner, the biggest developer of data centers, and our pipeline right now is up 25% year on year. Now, there are some companies who are, doing a little less. There's sort of an ebb and flow. I think there will be a little more caution on committing, just given the environment. But because the underlying demand is so strong, the demand for data centers. OpenAI, I think, is up 4-fold in users in the last year. So I think this trend is powerful. I think it will continue. I do think the chip restrictions outside the U.S. are slowing things a little bit down. I think finding some solution there, maybe U.S.-controlled data centers, so that the security concerns are eliminated. I think that would be helpful because that's probably one area where we've seen a little more slowing. But overall, we still see a ton of demand for data centers.
And so you still see as an opportunity. I'm curious in terms of the timeline, because you were early, to be fair, and rightly so. Is it another couple of years of increased spend? Do things start to really even out, in 18 months? I don't know.
I think it's very hard to say, but if you think about ultimately, there will be billions of bots, virtual bots, and probably hundreds of millions, billions of robots too, lots of driverless cars. I think you're going to need a lot of GPUs, a lot of data centers. Technology could change over time, but the way we do this is we sign very long-term leases with big companies, and that's the way to mitigate the risk. But I still feel like we're early days in this infrastructure build-out. The other area that's exciting tied to it is what's happening with electricity. So it's probably been our biggest theme: power, utilities, utility service companies, all sorts of business, electrical equipment, things that weren't that exciting, I think become increasingly exciting because of these power needs.
It is the gating issue, conceivably, for our ability to continue to grow in this area. Do you think we're going to be able to meet the demand from the electricity side?
I think we will. I do think some of the regulatory and permitting reform is important. I think looking at all sources of power, yes, we want renewables, but we're going to need to use natural gas. I think all of that is important, and it's a global issue. I mean, everywhere there are constraints. And look, utility usage, power usage was flat for 20 plus years. Now it's growing 4+%. It has an enormous impact. But I think big companies are recognizing this, and I think the investments will come. And importantly, the government recognizes it. And so it is the gating factor on this sort of technological revolution we're on.
Yeah. I want to come back to AI for a moment before we, again, get sort of a macro view from you and some other things. Because you make an interesting point. There's so much happening every day right in front of us in terms of the administration and tariffs and the economy. AI is over here, but it's only increasing in speed. What are you seeing internally, versus 6 months ago or a year ago in terms of the way you use AI at Blackstone and what your expectations are for how meaningful the change will be within enterprises?
Well, it's still early days, but the amount of time, effort, and energy we spend on this is significant. We just hired Rodney Zemmel, who ran AI for McKinsey. Gives you a sense of the importance. We've been on data science with a team of 50-plus people for a long time now. We're continuing to work with our companies. I think what's really interesting are rules-based businesses. So think about accounting, tax, legal, financial transactions, healthcare transactions. I think AI can be super powerful in making these companies more efficient and the customer experience is better. So we're spending a lot of time buying businesses in those areas, and then trying to apply it. But it is still early days. I wouldn't want to overstate that this is happening overnight. The area where there's probably the most impacts on coding, some of the technology things we're doing internally, and then content creation, I think, will be another interesting area.
You do. But as for those efficiencies that are going to significantly add to margins, either because they simply make things faster or they replace people, that's a ways away?
I think it's going to continue to move. I mean, it does feel very early to get the machines to answer the questions, to have the accuracy levels, to get the applications. The LLMs are very powerful, these large language models, and yet it's a little bit like translational medicine. The basic science really good, but getting it to the bed at the hospital is still taking time. I think this application layer is going to be very exciting. That's going to enable companies to do it. So I still think we're in the early days. I think each year we're going forward, we're going to see very significant increases.